In today's video, I want to introduce an advanced indicator on TradingView that measures the correlation between volume and price volatility and gives us some signals on the possible movements of the market. To add this wonderful indicator to our chart, here we click on indicators and we search multiple frequency volatility correlation. This one, which is an editor specs indicator, and it's written by Ricardo Santos. Alright, this is the indicator, and as you can see, it's added here below the chart, and let's see how it can help us in trading. First, let me explain its different components and how it's built, and then I'll teach you how you can use it for trading. As I said earlier, this indicator uses complex calculations to measure the correlation between volume and price volatility. It looks at the past data to see if there is a correlation between volume and the price movement, and it shows the measures by the help of these small dots that are distributed all around here, as you can see. The scale of this indicator is from -1 to +1, which is actually a measure of correlation if you're familiar with statistics, and each of these dots that are plotted here are showing a measure of correlation in this scale, ranging from -1, which shows low correlation, and +1, high correlation. As you can see, the dots have different colors. Actually, they are green and purple with different shades. If the price volatility was rising, the dot color is green, and if the price volatility was falling, the dot is purple. So green dots show rising price volatility and purple dots show falling price volatility. The ones that are in faint color, they are calculated by the help of longer historical periods, for example 512 candles, and the ones that are darker and in solid color, they are calculated from the most recent candles. On every vertical slice of this indicator, which corresponds to every candle formed for that time period on the price chart, the way that dots are located in that period gives us some insights about volume and price volatility. If the dots are mostly in the top, like this area or this area, this is telling us the higher volume means more price volatility. If they are green, it means rising price volatility, and if they are purple, they show falling price volatility. Please pay attention that this is not a directional indicator where lower readings show something like declining of the price and higher readings advancing of the price. As I said, this is a scale for correlation, and reading 1 means high correlation regardless of the direction of the price. So whether the price is advancing or declining, having the distribution of dots in the top area shows high correlation between volume and price volatility, and the color of dots can help us with the direction of the price volatility. For example, having more green dots in the top can show upside price volatility, and having more purple dots in the top can show downside price volatility. And please pay attention, the more they are closer to 1, the stronger they are, and on the other hand, the more they get close to -1, the weaker they are. And another point about the colors, if you remember, I said the faint ones are from longer historical periods and the solid ones are from recent candles. So when we have the faint ones mostly in the bottom and the dark ones mostly in the top, this shows that recently there has been a correlation between volume and price volatility. So any repetition of this pattern can have considerable probability to see the same price behavior. Also, we have 3 lines here, and as you can see, they are changing over time. This middle line shows average changing over time, the bottom line the minimum, and the top line the maximum changing that is happening over time. We have also some boxes here in the right side of the indicator that shows the distribution of the frequency of the dots in different categories of correlation scale. For example, from -1 to -0.9, from -0.9 to -0.8, and so on up to +0.9 to +1. It shows the number of dots in each range and also the percentage as the total of dots found in that range. Alright, until now you learned how you can interpret this indicator and use these descriptive dots and colors to discover what is going on in the market in terms of correlation between volume and price volatility. And now let's see how it can help us in trading by giving us some signals on the possible next movement of the market. As I said, this middle line is the average changing over time, so it's crossing above and below 0 can give us some signals on the strength or weakness of the price volatility. When from below 0 crosses above 0, it can show us that the price volatility is gaining strength, whether it's advancing of the price or declining of the price. For example, here after crossing above 0, the upside momentum increased and we had advancing advancing of the price. And here after this crossing above zero, similarly we had increased volatility but downside momentum increased, and we had declining of the price. As I said earlier, this indicator gives us signals on increased or decreased price volatility, not explicitly direction. We can know about direction of increased volatility by the help of dots. For example, having more green dots in the top can show upside momentum, but it's better to identify the overall trend of the market by other tools. You can identify direction of the market with price action analysis, or for example with some indicators like pivot point super trend, this one. And then when you have crossing of this line above zero, which shows increased price volatility, then you can use it as confirmation for trade entry. For example, here, since the super trend is green, so we know that the trend is up. And when we have signs of increased volatility, which is actually these crossings above zero, we can use them as confirmation for opening a trade in the direction of the current trend. In this situation, crossing below zero can show a pause or a pullback, or it can also show starting point of a reversal in the market, like here. Here the line crossed above zero, showing increased price volatility but not for advancing of the price, and this increased price volatility is for declining of the price. And if you pay attention, it coincides with color changing of super trend, which is actually showing reversal points of the market. This was just an example to show you how this indicator should be used in practice, and these signals of increased price volatility can be used with any other trend following strategy or reversal strategies to further confirm your trading decisions. As I said earlier, this indicator doesn't show direction of the market. It only shows increased or decreased price volatility, whether the market direction is up or down, and it's a perfect tool to be used in your trading strategies alongside with other tools to confirm your trade entries in the current trends or reversal points of the market. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.